Welcome to The Explainer. Today, we're going to tackle something huge, one of those myths in personal finance that just refuses to die. We're going to bust it, and we're going to do it by looking at the cold, hard facts. So let's get right into it.
So here's the big question, right? You know the feeling. You've got that one card, maybe it's got an annual fee, just sitting in a drawer collecting dust. You want to close it, but everyone says, no, don't do it. It's your oldest account. It feels like it could be financial sabotage. But is that actually true?
All right, before we totally dismantle this myth, let's set the stage a little. It really helps to know where we all stand. Let's talk about what the average credit score even looks like, just to put everything in context.
So get this. The average FICO score in the U.S. as of 2023 is 715. And hey, that's not bad. That's a solid good score. But, and this is a big but, that single number doesn't give us the full picture. Not even close.
Now check this out. When you break it down by age, a really interesting pattern pops up. Scores just climb as people get older. You see Gen Z hanging around 680, but then you look at baby boomers and they're way up at 745. So what gives? Are the credit bureaus just being nice to older folks? No. It's not about how many candles are on your birthday cake.
The real reason is so much simpler. It all boils down to one thing: the length of your credit history. Think about it. The longer you've been managing credit and hopefully doing it well, the more proof lenders have that you're not a risk. It's not about your age, it's about your financial track record. Okay, so to really bust this myth, we need to peek under the hood and see how this whole thing is built. Think of your FICO score like a recipe. It's got 5 main ingredients, but, and this is key, they're not all used in equal amounts. And here's that recipe broken down. Look at this. 2 things are just huge: your payment history and how much you owe. That's 35% and 30% respectively. Add them up, and that's 65% of your entire score right there. Now look at the thing we're all worried about today: length of credit history. It's important, for sure, but it's only 15% of the total. That's a much smaller piece of the pie.
Now, inside that amounts owed slice is something called credit utilization. And you've got to pay attention to this. It's just the percentage of your available credit you're using. So if you've got a $10,000 limit and a $2,000 balance, your utilization is 20%. Easy, right? The general rule of thumb is to keep that number under 30%. Now, burn this concept into your brain, because it is literally the key to unlocking this entire myth.
All right, enough with the theory. We've got the rules of the game down. Let's apply them to a real-life situation. A classic puzzle. This actually comes from a Reddit post, and it's something I think so many of us can relate to.
Man, you can just feel the anxiety in that, can't you? This person is throwing away money every single month. We're talking nearly $100 a year, all because they're terrified of messing with their length of credit history. It's a classic case of fear-based finance.
So let's really dig into this situation. It's an old Credit One card, which, let's be honest, often falls into that starter or even predatory card category. The limit is tiny, just $300, and yet it costs $8 a month. That's a $96 a year fee for basically nothing. And this is the exact kind of card that financial folklore tells us we have to chain ourselves to forever.
So, what did the smart folks on Reddit have to say? What was the answer? Well, this is where it gets good. This is where we take that old, conventional wisdom and flip it completely on its head. Let's bust this thing wide open. Here it is. The big secret. The thing the myth gets totally wrong. When you close a credit card, it doesn't just vanish from your credit report. No way. As long as it was in good standing, meaning you paid it on time, it stays on your report for up to 10 years. And get this, for that whole decade, it keeps aging. It continues to contribute to the average age of all your accounts. And hey, don't just take my word for it. Listen to this. This comes straight from the horse's mouth, from VantageScore, one of the big scoring companies. They say, and I quote, "Closing accounts will not result in a reduction in your credit scores as a result of the loss of the value of the account's age." It's right there in black and white. Think about it this way. 10 years from now, when that closed account finally disappears, all your other accounts will be 10 years older too. The net effect on your credit age, it's going to be tiny if there's any effect at all. So, if it's not hurting your credit age, what's the big deal? What is the real impact? Well, remember credit utilization? That's what changes. When our Reddit friend closes that card, their total available credit drops by $300. It's not a lot, but if they have balances on other cards, their utilization percentage will tick up. But, and this is the beautiful part, utilization has no memory. It's like a scoreboard that resets every single month. Pay down your balances, and boom, your utilization drops right back down. So, what was the verdict? It was a landslide, a unanimous decision. The advice was clear. Close the card. Stop paying almost $100 a year for a useless piece of plastic. Yes, the score might take a tiny, temporary hit because of utilization, but that's nothing compared to the money saved. And that score, it'll bounce back super fast.
Okay, so what does this all mean for you? What should you actually do with this information? Let's boil it all down into a simple, straightforward action plan. No myths, no fear, just the facts. Honestly, it boils down to just 3 things. Step 1, pay your bills on time. Every time, no exceptions. That's the single biggest chunk of your score. Step 2, keep your credit utilization low. Don't max out your cards. That's the second biggest piece. And step 3, check your credit report. Go to annualcreditreport.com, it's the official free site, and make sure there are no mistakes. If you just nail these 3 things, you're not just on your way, you're basically there.
So now that you know the truth, now that you know the facts, what's the one credit myth you've been clinging to? What's the one piece of bad advice you need to let go of? When you focus on the facts, not the fear, you take back control. And that's a pretty powerful feeling.